But we've got Pawan Parakh as well joining in right now from Renaissance Investment Managers to chat about what his take is on the markets. Pawan, hi, good to have you on the show. Thanks for joining in. Pawan, there's this whole debate about whether the small and mid caps are now getting frothy, whether the next lap of the move is going to come in from the large caps. Do you now need to turn cautious when it comes to the broader end of the market? What's your take?
No, I completely agree with that argument. In fact, when I was there last time on your channel, I did highlight that, I could see a lot of froth in low quality mid cap, small cap stocks, given the rally that's happened over the last 4 or 5 months. And if you take slightly longer periods, say about a year or so at the index level, while companies have reported decent set of numbers, at the index level, large Nifty index hasn't delivered anything. So very clearly, there is some sort of fraud getting built up into mid cap, small cap names, and one has to be really cautious about it at this point in time.
Okay. So since you are recommending turning cautious, what is it that you're recommending a bullish bias towards and across market cap categories?
So what we've been maintaining over the last about 1-2 months is that there are stocks in perhaps every sector which don't deserve the valuation that they're commanding as of now. Hence, it's very important to be very stock specific. Take the case in point of the entire tech sector. Some companies have delivered decent numbers, some have not delivered so very great numbers. But given the rally over the last, say, 3 months or so, perhaps every tech stocks have done generally well, right? So tech is one example, banking is one example, auto is one example. So I think there are examples across sectors wherein stocks across the board have done well, but earnings haven't followed the same trajectory. Hence, it's very important to be very, very, very stock specific in all the sectors that one wants to take position into.
Okay, so that's a take coming in. You need to be very, very specific in terms of your stock picking at this point of time. But what about pharma, Pawan? Which vertical within pharma are you liking right now?
So we're essentially, focused more on companies with US exposure as of now, very clearly. I think across the board, I think the data is very loud and clear that there is some sort of a drug shortage in US. The pricing erosion is no longer there. In fact, some of the companies anecdotally have got clearances of their factory. So very clearly, the cycle which was not in favor of these companies for last so many quarters and years seems to be turning in their favor. And I think it's very clearly visible in the results of some of the pharma companies that they've declared in last about 10 days or so. On the other hand, if you see, typically Q2 is a acute heavy quarter, and given that acute season hasn't been very great, so domestic growth for across all companies has been in the range of 5 to 7% on an organic basis. And typically, when these companies which have got US exposure, they deliver some very strong growth. Safe to believe that profit growth will be significantly higher than the revenue growth. So we are very clearly placed on companies which got international exposure as far as pharma sector is concerned.
Right. Okay. To stay with us, we'll come back to you. But here's an ET exclusive, and we've got Sunil Sharma, the founder and managing partner at Kedara Capital, discussing factors influencing India's growth. He also chatted with my colleague Anurag Joshi about, the bullish sectors that he's currently seeing.
If you look at it globally, there has been a slowdown, and we are well aware of that. There is a little bit of that rub-off that is happening in India. Having said that, if you look at where India is today, it's in a very, 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 very strong position. This is driven off strong fundamentals, where the underlying performance of the economy is good. You see a geopolitical position where India is in a very strong position and the youngest population, and which is leading to a very strong consuming class. This is leading to India being in a strong position. Yes, has there been a slowdown? Of course, there's been a slowdown compared to what it was over the last couple of years. But I personally believe that there is going to be a lot of growth in the economy. You'll see PE community especially. VC to a lesser extent, given the slowdown is more marked there. PE community will continue to invest more aggressively. And you will find a lot of the strategics and global corporation begin to invest more aggressively in India. And I think that's what's going to lead to a lot of growth in the country. One other small thing I wanted to highlight, which I think smart investors have always done, is this whole fundamental fact of counter-cyclicality. If you look at what Warren Buffett says, he says, be greedy when world is fearful be fearful when world is greedy. So I think a combination of that is what we have always been very, very careful of. That we basically, sorry.
Yeah. And do you expect India's resilience, and India has been kind of an outlier in this aspect among the major global economies, to help correct the slide?
I would say my personal view is there is a reason why India is now a topic of discussion in every global boardroom. The resilience of the economy, the performance of the economy is visible to everybody. If you look at the central government balance sheet, stronger than probably, thank you, than it's ever been. If you look at the corporate balance sheets, a lot of cleanup has happened. A lot of people have paid back a lot of their debts. They're healthier than they've ever been. That's why they're investing a lot more than they haven't ever invested. If you look at it, basically, the individual balance sheets, that's never been a challenge in India. People have always invested and borrowed much less in India. And then the last thing is the bank balance sheets, probably stronger than ever before. Every bank is giving, I would say, record profits across the board. So I feel India is in a very good position. We feel very strongly about that position. That's why you see in the last 1 year, we've invested in 6 companies.
Okay.
Right from doing an incremental investment in Lenskart, ASG, Oasis, Avance, Oliva, Perfios, K12. We've invested in a bunch of these companies because we believe this is a great time to start investing in India and be more aggressive on India. So that's
6 companies. So what's the outlook on deal-making activity in 2024? And if you have to pick up, I won't ask you about 3 companies, but I can ask you about 3 sectors.
Sure.
Which will be your favorites in 2024?
So I would say, if you look at the deal activity, it's a very, very important question. And I think everybody has been talking about it, thinking about it. From a deal activity perspective, see, public markets are already open. If you remember, they were closed till 6 months back. There are more IPOs happening, record IPOs happening. IPOs are doing very well. So public markets are already open. Private equity is definitely started using more traction. People are being careful. Yes, people are being careful. But I do believe that the traction on private equity, investment in private equity for good companies. So there's a big flight to quality in IPOs and in private equity.
Yeah.
VC is probably a little bit slower, and rightly so. I think it's good for the industry to slow down. There was just too much capital in that industry. It'll help a little bit of slowdown. Companies go back and focus on profitability.
Come today.
One.
So that's about how deal making is likely to pan out in 2024. In the meantime, not much is actually happening in the equity markets for now. It looks like people have already gone for their Diwali holidays. Volumes have been on the lower side throughout this week, and today as well seems to be no different, at least at the index level. In fact, Bank Nifty too has given up most of its gains, and it's actually difficult to pinpoint stocks which are managing to outperform by a huge margin. Nonetheless, Pawan, within the real estate pack as well, where does the preference lie, or is it getting a bit more toppish for you now?
No, I think real estate continues to remain very exciting, and in fact, we are playing that entire real estate and building materials theme with stocks across sectors. So we own cement companies, we own building material companies, we own select real estate stocks.
I think we'll snap that line with you. Thank you so much, actually, Pawan, for making time and speaking with us. We'll let you go on that note, given the fact that we're just 5 minutes towards the close of the trading session.